saw a great thread visualizing some lessons about investing over on X. Lesson number 1 is that dollar cost averaging makes market timing irrelevant. This chart may as well be my buying activity on Tesla stock since early 2016. For more than the past 8 years, with essentially every spare cent, when I have money, I buy Tesla stock. I haven't attempted to time the market because I understand this, and I acknowledge that over time, there'll be periods where I buy Tesla stock, and then days, weeks, months, quarters, even years later, I could be buying it for a lot less than I paid for it recently, but I'm also buying then. This has resulted in an average price on Tesla stock since I began buying in early 2016 of less than $110 per share. The stock currently over 170. I've paid as much as $393 for Tesla stock in November 2021 and as little as $12.36 in May 2019. I openly acknowledge that my brain is nowhere near big enough and my ability to see into the future so limited that I don't even try to time the market. I just look over a long time horizon, a decade plus into the future, and think, a decade from now, will I be glad that I was buying at these prices today? If the answer is yes, I keep buying, which is exactly what I've been doing now for more than 8 years running. Lesson number 2, cash is short-term safe, but long-term risky. These are absolute facts. Another reason why instead of having an absolute mountain of cash, trying to time the market and waiting for dips, I just buy when I have cash. Now, don't get me wrong. You do have to be able to account for emergencies, e.g. through consistent income or some form of a safety net or the willingness to sell assets you'd prefer to hold on to in case of emergency. But it is my belief that generally speaking, cash is trash. Why? Inflation. If you have a pile of cash and do literally nothing, its buying power will erode over time due simply to inflation. On the flip side, over time, stocks, generally speaking, on average, tend to trend higher. Now, obviously, we're not just talking about individual stocks, but the general trend is up, whereas cash gets eroded due to inflation. Another reason why I'd prefer to be in the market than sitting on the sidelines. Another great lesson, expect the market to play all kinds of mind tricks on your emotions. Luckily for me, I'm an autistic robot, so it does not apply. Jokes aside though, the example on screen now, you buy a stock for $10, it's now $20, you're on top of the world. You buy a stock for 10, it surges to 30, then it comes back to 20, you want to jump off a bridge, at least apparently. The way that I completely bypass this roller coaster is by not giving a flying fuck what the stock is currently worth, according to the stonk market, but instead looking into the future, keeping my eyes on the prize and thinking, what do I think the intrinsic value of this company will be that I happen to own at X date in the future, far from now? Is it more than current? Great, I'm happy. Another important lesson, watch the business, not the stock. I've said in the past, especially as it relates to Tesla, I think it's extremely uncommon, rare, super infrequent that Tesla stock accurately reflects the value of the company. In fact, I can only recall just a couple of times ever since I first published my Tesla fair valuation, where Tesla stock actually exceeded what I believe to be a fair valuation, and not for long. At that time, of course, a lot of people, hey man, you're going to increase your price target. Look, it's gone past you. Bro, no, that's not how it works. My fair valuation is based on my assumptions, not what the stock's currently worth. Most of the time, however, the opposite has been true. Tesla stock, relative to what I think it's worth over the long term, deal of the century, hence why I continue to buy. One way to know if you're confusing the two here, conflating the stock with the business, for example, would be if Tesla stock's down a bit and suddenly you feel a compulsion to demand that Elon Musk shut the fuck up and stop having opinions because it's destroying Tesla. This may actually be the most important slide that we're going to cover. This stock is not the business, and the business is not the stock. This is why I continue to urge everyone watching, and I know most of you are too lazy to do this, but you really should have built your own Tesla valuation model. And you should be thinking through different scenarios. What's the worst case, the best case, what's a happy medium? Now, obviously, this is as much art, if not more art than science, but you've got to take the time to go through this process, because then you'll have an intrinsic idea of what you believe the company, the business, is worth. And then when the stock starts swinging around like an unrestrained meat club, instead of panicking or worrying, getting euphoric, you'll be able to refer to your valuation model and think, okay, looks like a bit of a deal now. Oh, it's probably fairly valued now, maybe not buying right now, etc. As opposed to being blown about by the winds of sentiment. Another great one here, the words say everything. We don't even need to look at the slide. Buy damaged stocks, avoid damaged companies. Saying I'll be greedy when others are fearful in a bull market is easy. Being greedy when others are fearful is damn hard. And the slide here, stock surging, people are saying I can't wait for a pullback, as opposed to me who just kept buying. Stock collapsing, People say it's too risky to invest now. Meanwhile, still buying with every spare cent. Anyone know any folks right now who are of the mindset it's too risky to invest? They've been selling, they've been trimming their position, they've been paring back, they've been dumping Tesla stock. No, neither do I. Another one, on time. The best way to double your odds of success is to double your holding period. Now, this is slightly unscientific, but the point is valid. In essence, you hold a stock for a day, you get a 50-50 chance of making or losing money. Hold it for a year, you're more likely to make money than lose. Hold it for 10 years. You're very likely to make money and extremely unlikely, but it is possible to lose money. And over 20 years, you will make money. The example here, the S&P 500, there isn't a single instance over a 20-year period in which the S&P wasn't up over a 20-year interval. Not one. Now, it's true that individual companies can perform differently to the index, but the principle still holds. The shorter the time horizon, the greater the volatility, the higher the probability that you lose money. The longer the hold period, the longer the probability that you'll make money. Time for a quick detour. I posted this on X yesterday. I like to keep track of these things just to learn about my decision making. In 2019, I sold a bunch of stocks to buy more Tesla. And before the sales of these stocks, my stock portfolio was already more than 80% Tesla stock. The intention was always to be extremely heavy in Tesla. However, I did spread a little bit of capital around some other stocks in some industries with some technologies, etc. that I thought, generally speaking, probably more likely than not would see reasonable growth. Hedging my bets just a little bit, given the fact that when I began buying Tesla stock, it had essentially gone nowhere for a couple of years. I thought, well, this could continue, but surely not every one of these other stocks is going to do the same. So maybe at some point I can sell those, buy a bit more Tesla. Let's see. Still a fairly green investor. I'd only been purchasing investments since 2010, beginning with real estate. So 6 years later, still fairly inexperienced. Of course, Tesla stock crashed in 2019 to ridiculous lows in the low teens. I was buying as cheap as $12 and a few cents per share split adjusted. So despite the fact that I was on sabbatical and had an emergency fund to tide me over while I was not actively working for income, that was my emergency fund. It turns out the emergency was Tesla stock crashing. So not only did I sell these stocks, but I also dumped my entire emergency fund into Tesla stock at these levels. And just to be clear, I did retain my Google and Amazon stock, which I did sell later. Google in December 29th, 2020, and Amazon in March 2021 respectively, and put those proceeds into Tesla stock as well. Now, the reason I'm sharing this is because I keep track. So what we're looking at here are the different stocks and or ETFs that I owned that I sold in 2019 to buy more Tesla. All of these were purchased between 2016 and 2017. I keep track of what these stocks would have done since. Technically, it's automated. I use Google Sheets to automate this process, but the reason I keep track of this is to see my decision-making process. Was selling these to buy Tesla, was that the move? Now, in every case except that of Nvidia stock, the answer is yes. The average return on Tesla stock on each of these sales and then putting those proceeds into Tesla is about 980%, whereas the stocks that I sold, the average return on those since I sold them is about 260 or 270%. So clearly, on average, this aged like a fine fucking wine. However, the point that I'm illustrating here is just regarding hold time. Even if I'd kept these stocks with hold periods of 6, 7, or 8 years, only 2 of these would still be in the red. The rest of them, by the way, shout out to China, Alibaba and the K-Web ETF, absolutely wrecked. Aside from those, we've got a few ARK ETFs up close to 60 or 70%. Activision doubled and then got acquired by Microsoft. A few more ETFs, robotic surgery company, Microsoft up 243%. Netflix, 70 odd percent. Nvidia, up about 2,000%. Qualcomm, more than doubling. This is a clear visual example showing numbers based on hold periods. Now, I have zero regrets about this decision. This is why I continue to rail against people who think their brains are large enough to trade in and out of stocks over the short term. Of every 100 people who actually think their brain's big enough to succeed at this over the long term, probably one of them actually do have a brain big enough to be successful. Unfortunately, if you have a little bit of luck over a very short time frame, you get a few wins, you think you're a genius. Next time you're telling everyone you're a genius, and eventually you get absolutely roasted. This is a classic example, Microsoft stunk. A company I've been very well aware of since I was about 5 years old. Some of you weren't even born in 2000, but this was roughly the peak of the dot-com bubble. And Microsoft stock at that point peaked, call it close to $60 per share. A decade later, the stock was still down 50% from those all-time highs. A decade after that, however, up 158%. And less than half a decade from that point, in total, if you'd held Microsoft, in fact, if you bought Microsoft at the absolute peak of the dot-com bubble and just held, call it 25 years, up over 600%. Remember when everyone thought the world was ending and then it didn't? Microsoft and many other stonks collapsing 30+%. Imagine you panicked and thought the world was ending. Oh my God, I better stay home. I'm scared. Help. Oh, Daddy, please inject me harder. Please tell me what I need to do. I will comply. I'm scared. If you'd bought into that narrative and panic sold, you might have copped a 30% haircut on Microsoft. But if you just held, you're now up 30%. And Microsoft, since its IPO, up 428,000%. Google stock has also gone through its ups and downs. Over a 1 year period, 2007 to 2008, stock down about 60%. And during the scamdemic, Google stock collapsed over 40% and then rebounded pretty violently and is now breaking through all-time highs. Amazon stock doesn't look that different to Google. Similar story. Now, if you know, you know, there was a time around the dot-com bubble where Amazon stock got absolutely slaughtered. I think it was down about literally 90%. More than 90%, in fact. You can see on screen now. Literally more than 90% down. If you panic sold there, rest in peace your investment. If you continue to hold, up 3,700%. Again, in about 25 years. We saw the same crash with Amazon stock during the scamdemic, down over 50%. Hilariously, by the way, I mean, think about this, bro. Hello, Amazon, get shit delivered. If people are scared and panicking and staying at home, or being forced to stay at home due to fascist, futile, inhumane lockdowns, you might think people go, hang on, well, maybe that will benefit a company that delivers shit to people. Idiots. And sure enough, Amazon stock now pushing all-time highs once again. If you get swept up in the fear, uncertainty, the doubt, the panic, try to time the market, oh my God, it's crashing, I better sell now, probably didn't age well. And the final example is Apple stock. Over the long term, solid gains, but there's been a lot of volatility along the way. Given how much Apple's grown, however, it's hard to see that, but there's been massive drawdowns on Apple stock. Better part of 40%, over 30%, crashing during the scamdemic, and then reaching new all-time highs. It really is true that, on average, the longer you hold, the more likely you are not to lose money. That is assuming you haven't bought a steaming pile of excrement. Next slide. So on point. Developing the right mindset is 95% of investing success. Absolutely agree with this, by the way. One mindset, stock surges, hooray, my net worth went up. But the real G's, stock crashes, and they think, hooray, my favorite stocks are on sale. And this is a really compelling insight in terms of whether or not you're really cut out for investing. Most people watching this channel own Tesla stock. How do you feel when the stock surges versus when the stock has collapsed? I've said it before, I will say it again because it continues to hold true. The cheaper Tesla stock, the better. And this is the difference between myself and people who are judged over the short term because they're managing money for other people, they're judged on their quarterly performance, who genuinely want to see Tesla stock higher so their fund looks like it's performing well for their investors. I want Tesla to be as cheap as possible because I am still buying. Again, I have a Tesla valuation model. You guys are welcome to access. Click the link in the pinned comment to join Patreon at the investor level and above. And you can see my assumptions out over the next decade and understand why I continue to buy with every spare cent. I'm not sitting around and waiting for Tesla stock to crash, waiting on the sidelines, waiting to buy the dip. I just buy when I've got money. But psychologically, the cheaper it is when I happen to have money and be buying, the better. And I'm over the fucking moon right now that I'm buying in the high 100s per share. I wouldn't have predicted this. But it turns out my prayers to the flying spaghetti monster, the one true Sky Daddy, have been answered. I genuinely believe I'm going to look back 10 years from now with Tesla's market cap around $500 billion as I record this, and then pat myself on the back like I continued to do for my purchases back in 2016, 17, 18, 19, blah, blah, blah. You get the point. Because to me, with the valuation model guiding me, not my emotions and my feelings, it really does seem like the best risk-adjusted opportunity that I am personally aware of in the stock market. And I'm literally putting my money where my mouth is. This really is the litmus test as to whether or not you're cut out for investing. Tesla stock's on sale, you get pumped, or you feel sad, cry in the corner, ask for daddy to hold you, and even start raging out loud, Elon, do something, Elon, make the stock go higher. The truth is, there are a lot of people out there who just are not cut out emotionally to invest over the long term. They just can't handle it. They're too emotionally fragile. They panic at the worst possible time. They feel like a fucking genius when a stock surges, and then depressed when the same stock they love is on sale. Another great slide here. Planning is useful, but the real world never matches a spreadsheet. And this is absolutely on point. Expectation here, a perfectly smooth curve up, and reality, extreme volatility, yet still trending in the same direction and ultimately ending up at the same destination. This was such a great thread to go through. Some really invaluable visualizations, some key principles in terms of investing. I just wanted to close with this visualization, which looks surprisingly close to the slide we saw at the beginning of this presentation about dollar cost averaging. These are the prices I have purchased Tesla stock over time. Just to be clear, these are transactions plotted. Every transaction on Tesla stock. All purchases, never sold any. They're not spread out evenly over time. This is just what I paid at each time of purchase. In the early days, I was buying Tesla stock in the teens. Then around the $40, $50 range, still thought it was a deal, 160, 117, 138, 131, 288. Continued buying. Again, the highest transactions there, close to $400 per share. Buying all the way down and still buying today. Most recent transaction, $176.69 cents per share. This is my buying behavior visualized from early 2016. More than 8 years of transactions on Tesla stock. You better believe that in 2024, for me, still buying Tesla stock around a market cap of $500 billion, on the cusp of autonomy, working on a humanoid robot. If I were to make a bet, my bet would be that future Stephen is going to be very, very, very pleased with present Stephen and his decision making around Tesla over the last 8 years. Want more content? Early access? Bunch of perks? Click the links in the pinned comment. AG1 has given me a massive, meaningful boost in energy, allowing me to do a lot more every day, including using my brain more and using my body more. I highly recommend you guys and girls check it out. It's an excellent way to fill in nutritional gaps. It's got 75 high-quality vitamins, minerals, and whole food source nutrients, plus prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. Plus, if you click the link in the pinned comment or head to drinkag1.com/SMR, you can get yourself a 1-year free supply of vitamin D3 and K2. But don't take my word for it. Here's what some of you guys and girls have to say. AG1 has changed my life. I was, as you described, treating myself like a circus, ate like trash, rarely exercised, used alcohol as a stress crutch, cannabis also. AG1 is what gave me the kick in the ass, got me back to the gym, motivated me to do more for myself, family, my business, etc. Keep doing what you do. Now, I know there's some skeptics, the same kind of people who think Elon Musk is a fraud, reading this going, what do you thought? There's no way that's possible, bro. It must be a placebo effect. Believe it or not, this is a recurring theme. If you give your body everything it needs to feel and perform its best, including having a lot more energy, you'll need ways to use that energy. For me personally, that includes more exercise, moving my body more social activity, and more cognitively demanding tasks, including producing a fuck ton of exclusive content over on Twitter and on Patreon, plus my daily YouTube uploads. The proof's in the pudding. On to another testimonial from a viewer of this channel. SMR, you asked me to provide feedback on AG1. Here it is. It has helped with mental acuity, stamina, and intestinal waste management. Can't read between the lines. It certainly helps with regularity and digestion. That's what the digestive enzymes are for. It has also dramatically reduced my cravings for sugar. You guys need to stop eating sugar. It's fucking poison. I'm 50, 5'9", and overweight, aka a fat motherfucker. I think that's a technical term for overweight, isn't it? Is it fat motherfucker or obese? I can't remember. I average 100 hours a week in the West Texas oil fields as a safety supervisor. Jesus Christ, dude. No wonder you're struggling to keep your weight under control. 100 hours a week. Brutal. It has helped me lose weight. It is not an appetite suppressant. It can help fat people suppress cravings, and motivation to be healthier is critical for changing your diet. Love you, brother. Again, this is a great point. It's something people really don't seem to grasp. If you have more energy, everything becomes easier. It's like turning on easy mode for life. A few years ago, before I was taking AG1, my health was trash. I was struggling to get through the day, had afternoon fatigue. The last thing I wanted to do was either use my brain or move my body. Didn't have the energy. Now, my biggest struggle every day is figuring out ways to use that energy. I'm exercising way more, doing a lot more with my friends and family, and of course, my work output has increased substantially. And you can fact check me. Check out the average length of my videos I was posting to YouTube 3 years ago. Need I say more? And one final testimonial. Love this one. Okay, here's the deal for me with this AG1 shit. I'm 41 years old and not the type to eat, drink, smoke, or sleep healthy, so I was skeptical. That being said, here's what I experienced. Day 1, meh. Day 2, afternoon fatigue was about 45 minutes late. Day 3, 0 afternoon fatigue. Day 4, 0 afternoon fatigue plus extra energy. Day 5, again, 0 afternoon fatigue plus energy, wondering, what the fuck, really? See, this is the thing, right? The results for many people are just almost too good to be true. This is the same experience I had. My afternoon fatigue just vanished out of nowhere. I'm like, wait, what the fuck? Why am I not tired in the afternoons anymore? Surely, it's not that AG1 shit, is it? Turns out it was. Day 6 and 7, same thing. Day 8, same thing. Plus, I had the want to get things done around the house that I normally would slack off and not get done. Again, the point, extra energy, you'll need to use it, you'll find ways to use it. Day 9, 10, and 11, and today is day 12. I fucking love it. So however you managed to get me to buy it, I'm so glad you did. Thank you so much, SMR. It really changed me so far. Guys, this shit really works. Just try it. By the way, This is the reason I continue to relentlessly promote AG1. A lot of people get real fucking mad in the comments. Oh my God, snake oil salmon's sold out. Oh my God, he's a scammer. This is fraud. But constantly, I'm pretty sure everyone making these comments is also currently short Tesla stock. I'm not particularly concerned about people having a negative perception, those folks suffering from small brain syndrome, still living in my bum's basement syndrome, etc., writing mean comments, claiming AG1's a scam or it doesn't work. I mean, bro, when I get feedback like this is what keeps me going. Just try this stuff for a month, and if you don't get these results, get your money back. See, it's a literal no-brainer. It's an IQ test at this point in time. Testimonial after testimonial after testimonial like this. Get your money back if it doesn't work. Just try it for a month, and if it doesn't work, get your money back. Today's the day. It's finally time. Be like this guy who was a massive skeptic, but finally, after 1,000 promotions in a row, caved in, tried AG1, and has results like this. Head to drinkag1.com/SMR or click the link at the pinned comment, and please, let me know how you're feeling in a few weeks' time. Now, if you'll excuse me, time to put my extra energy to good use. I'll be recording some more exclusive content for Patreon and my Twitter subscribers. So click the links at the pinned comment. See you over on Twitter and or Patreon, and don't forget to grab your AG1. Love ya.